Taiwan Semiconductor just announced their quarter four 2024 earnings, and we're going to be taking a look at some of the data associated with it. And then after that, we're going to look at the 25 outlook, as well as some news between the Trump tariffs, as well as a new fab facility out in Arizona. So let's take a look at these numbers. Okay, so if you're not too familiar with TSMC, they're a chip fab and contract manufacturer for the semiconductor industry. All the data I grabbed from this video was reports that they just published. I have the link right over here. You are welcome to explore that as well. I'll put it down below in the description. And also, just to mention, $1 is worth 33 Taiwan dollars. Now, obviously, conversion rates do change quite a bit, but that's the time of recording the video. And also, I grabbed this graphic over here to the right just to show you some of the larger companies that are TSMC's customers. The information for this graphic was grabbed by datagravity.dev. I did not produce this graphic, but you can see, quite a few large companies over there that you might be familiar with. Okay, so let's talk about revenue growth. They had 30% year-over-year revenue growth compared to 2023. And you can see the revenue 2894 in 2024 compared to 2161 the year before, right? But what is interesting in 2022, you had 2263. So it was down a little bit last year. And then also if you go back all the way to 2020, so 1339. So we're seeing solid growth, right? 18.5%, 42.6%. That 1 year we're down negative 4.5%. And then also growing up to about 34%. Now, how does the revenue per platform work, right? So HPC, high performance computers, well, that's over 50% of the revenue, right? Smartphones, another 35% of the revenue. Everything else combined is only 14%. And let's take a look at the revenue growth by platform, right? We're seeing a lot of revenue growth by HPC, a lot of revenue growth by smartphone. Everything else is kind of negligible, right? So you saw 58% for HPC, 23% for smartphones. And what they mentioned on the investor call is we expect AI accelerators to be the strongest driver of our HPC platform growth and the largest contributor in terms of our overall incremental revenue growth in the next several years. Now let's take a look at the revenue by wafer size. So predominantly 3, 5, and 7 is the most revenue in 2024. And you can also compare it to 2023 revenue. 3 nanometers had the largest, right, between 6 to 18%. 5 nanometers about the same, about 33 to 34%. 7 is down slightly. Also 16 is down slightly, but huge growth on the 3 nanometer side of things. And if you're not familiar with this measurement, this is 1 billionth of a meter. So example, if you take a look at a 5 nanometer wafer, right, this means that the transistors on the chip manufactured from that wafer will have features roughly 5 nanometers in size. All right, 2024 revenue by geography. North America, 70% of the revenue, about the same in 2023. China, 11 to 12%, about the same. Asia Pacific, right, 8 to 10%. Japan, 5 to 6%. And not much changes by geography. Now let's take a look at our income statement over here. You can see the net revenue by quarter as well as 2024 to 2023. We already talked about the revenue growth over here, but even quarter 3 to quarter 4, pretty significant growth. Also, you can take a look at the cost of revenue that has increased from 23 to 24 and as well as quarter 3 to quarter 4. On the data presented, it said the gross margin was 59% in quarter 4 2024, 1.2 percentage points higher than quarter 3, primarily due to a higher capacity utilization rate and productivity gains, partially offset by dilution from the continuous ramp up of our 3 nanometer technology. And if we go back a few slides, right, you saw the revenue of our 3 nanometer has grown from 16 to 18% from 23 to 24. And it says on a full year basis, gross margin was 56.1% in 2024, up 1.7 percentage points from 2023, mainly reflecting a higher capacity utilization rate, partially offset by N3 dilution and higher electricity costs. Again, just presented right over here. Okay, also part 2 on the income statement. So if this total operating expenses increased from 7.26 billion to 86.34 billion. Again, the conversion side of things, right? This is based off of Taiwan's currency. Given a higher gross margin, operating margin improved 1.5 percentage points sequentially to 49% in quarter 4. For full year 2024, total operating expenses represented 10.4% of net revenue as compared to 11.8% in 2023, mainly due to operating leverage. And then you can see over here, right, research and development and SG&A both increased from 2023 to 2024. SG&A actually quite a bit. And then also our operating margin has increased both in quarter 3 to quarter 4 and then 2023 to 2024. Taking a look at the non-operating items, you have a total non-operating items were a gain of 23 billion in quarter 4 compared to a gain of 23.4 billion in quarter 3. On a full year basis, the total non-operating items increased by 26 billion to a gain of 83.79 billion in 2024, mainly reflecting a higher interest income. And you can see quite a big gap right over here, right? 48.29 to 76.72. So I mentioned that right there. Part 4 of the income statement. So net income attributed to shareholders of the parent company was 374.68 billion, up 15.2% from quarter 3 and up 57% from quarter 4 2023. On a full year basis, both net income and EPS increased by almost 40% from 2023. And take a look over here for the common stock, right? Common share 14.45 in comparison to 12.54, and then over here 45.25 in comparison to 32.34. I'll jump into the cash flow side of things. So again, the notes directly from their release. So on a full year basis, cash generated from operating activities totaled 1,826 billion, including 1,405 billion from income before tax, 662 billion from depreciation and amortization, and 242 billion for other operating uses, which mainly included income tax payment and net changes in working capital and others. Net cash used in investing activities was 864 billion, primarily including capital expenditures of 956 billion. Net cash used in financing activities totaled 346 billion, reflecting of the payment of cash dividends of 336 billion, partially offset by the net increase in bonds payable of 27 billion. At the end of 2024, cash position was 2,127 billion. So taking a look at the cash flow statement, right, ending cash balance, we are seeing a big increase from 2023. Looking at our balance sheet now, so on a sequential basis, total current assets increased by 314 billion, mainly due to the increase of 254 billion in cash and marketable securities and 22 billion in accounts receivable. Total current liabilities increased by 184 billion, mainly due to the increase of 70 billion in accounts payable and 99 billion in accrued liabilities and other. Net working capital was 1,823 billion and current working ratio is 2.4. You just look over here, right, compared to where we were at in 2023. So current liabilities has increased quite a bit, right, 913 to 1264, but also so has the current assets, right, 2194 over here to 3088. Current ratio is the same at 2.4 to both of those over there, and that's a pretty good current ratio. So now let's take a look at some 2025 predictions that are stated. So based on our current business outlook, management expects revenue to be between 25 billion and 25.8 billion. And based on the exchange rate assumption of $1 to 32.8 NT dollar, management expects gross profit margin to be between 57 and 59% and operating profit margin between 46.5% and 48.5%. And some news about 2025. So quarter 1 2025 predictions for Q1 of 2025, TSMC is forecasting a sequential decline in revenue due to smartphone seasonality. If accurate, this would see the world's largest chipmaker bring in between 25 billion and 25.8 billion, a 5.5% drop over today's result, but up 34.7% over the same period last year. And other 2025 news, right? TSMC is building new fabs in the United States, Japan, Germany, and Taiwan. It said it expects capital spending for this year to between 38 and 42 billion, an increase as much as 41%. And also taking a look at capital expenditures, right? Between 23 and 24, it was pretty flat, right? But CapEx for 2025, about 70% of the capital budget will be allocated for advanced process technologies. About 10 to 20% will be spent for specialty technologies, and about 10 to 20% will be spent for advanced packaging testing, mask making, and others. And you can see that the capital expenditures really scaled up in quarter 4, right? See 6.4 to 11.23 change in US dollars and billions. But then also over here, right, our capital expenditures from 23 to 24, 949 compared to 956. So again, pretty much flat, but you did see that spike in quarter 4. We'll explain why that's happening in quarter 4. It's one of the reasons is this Arizona chip production, right? So TSMC Arizona Fab 21 mass produces 4 nanometer chips at a higher price than Taiwan. TSMC chip production in Phoenix ahead of schedule as company posts 11.5 billion profit. So just grabbing some information from news articles, right? We're able to pull ahead of production schedule in our first fab in Arizona. Already encountered the high volume production in Q4 2024 utilizing N4 process technology with yield comparable to our fabs in Taiwan. Also mentions this is not unexpected as chips produced by TSMC in Arizona cost more due to more expensive fab that requires depreciation, smaller scale production, a not fully developed ecosystem, and the necessity of shipping silicon back to Taiwan or somewhere else for packaging. Unverified reports suggest that TSMC's Fab 21 in Arizona is producing at least 3 types of processors: the A16 Bionic chip powered by Apple's iPhone 15, 15 Plus, and the main processor in Apple's S9 system and package featuring 2 64-bit cores and a quad-core neural engine for smartwatches and a CPU from AMD's Ryzen 9000 series. It is rumored that now only Fab 21 Phase 1A is mass producing chips, and the current production capacity of the facility is around 10,000 wafers starting per month. TSMC's Fab 21 Phase 1B is reportedly facing tooling bottlenecks and is expected to be fully equipped later this quarter, which will add 14,000 WSPM capacity to the production facility. So 1.6 nanometer chip production as well. TSMC plans to have 1.6 nanometer chips in volume production by 2026. I know this is technically isn't 2025 news, but this article mentions the Taiwanese-based BIS is looking to secure its share of the sector by ramping production of 2 nanometer chips this year and pledging volume production of cutting-edge 1.6 nanometer chips the next year. TSMC's N2 process node is well on track for volume production in the second half of 2025 as scheduled. This is expected to offer a 10 to 15% speed improvement at the same power versus N3E technology, or a 20 to 30% power improvement in the same period and an increase of more than 15% in density. It also mentioned that TSMC's A16 technology, which is scheduled to produce the 1.6 nanometer chips by 2026. This will be available with Super Power Rail, TSMC's version of the backside power delivery approach detailed by Intel, and the node is feature a further 8 to 10% speed improvements at the same power compared to N2 with an additional 7 to 10 chip density gain. Also, there's some news about the Trump tariffs. So, asked about TSMC's discussion with the current and next U.S. administration, let me assure you that we have a very frank and open communication with the current government and the future one also, but there's no other details based around that. And you can see the stock value compared to 1 month versus 1 year, quite a bit of growth on that 1 year spectrum, even still up 8.6% on 1 month. And that is it for today's video. Hope you guys found some value. And if you did, make sure to subscribe to the channel. Let me know your thoughts down below in the comment section. Are you buying or are you holding off on this stock? All right, see you guys.